Jup Lend is the most advanced money market on Solana, point blank, period. It'll automatically route your assets to the highest yielding pool. You don't have to pick which pool you're in.
It's the simplest way to earn any yield, 100x better than any other liquidation engine out there.
Liquidation penalties that you pay can be up to 100x lower than what you're going to pay elsewhere, right? So it is a meaningful financial difference for users.
GM, and a massive welcome back to Solana Floor for a special episode today with everyone's favorite cat herder. We've got Kash joining us to talk about Jup Lend alongside Fluid co-founder Samyak as well. Now, as you know, Jupiter isn't just the biggest DEX on Solana. It's really becoming a DeFi super app, and it's powering billions and billions in volume. And let's not forget that they gave the Solana ecosystem one of the largest airdrops in crypto history. So we've got Kash and Samyak with us right here in the flesh to break it all down. GM to both of you, and welcome to Solana Floor. Kash, let's start with the most important question here. Now that we're moving out of private beta, so what is Jup Lend? What can I borrow? What can I lend? Break it all down for me.
Yeah, Jup Lend is the most advanced money market on Solana, point blank, period. It's built in partnership between Jupiter, which I think most of the viewers will know, and Fluid, which anyone who's used EVM will be aware of as well. So shout out to Samyak, co-founder of Fluid, who's kind of him and his team did just God's own work to get this off the ground. And the basic idea for the Jupiter perspective was simple, right? We've been building towards this idea of a globally unified market for quite some time, right? Every asset in one place on Solana in particular. And, you know, as we've been thinking about it more and more, we realize that, hey, one of the critical pieces is not just to be able to have universal access to the universal exchange, but also to have a method to take those assets and make them productive, right? It's a critical part of DeFi. In many ways, one of the primary exports of DeFi as an industry is yield. And so we kind of had to think about it. We're like, hey, well, we could learn how to do this, but rather than learn, let's just go to the best people in the world at this kind of thing, partner together to put something really special together. In terms of kind of assets and what people can do with it, it has the simplest kind of earning vaults, passively earned yield, which unlike other protocols on Solana, it's a little bit different because it'll automatically route your assets to the highest yielding pool. You don't have to pick which pool you're in. And then of course we have lend and borrow, which due to the sophistication of the liquidation engine that Samyak and his team invented, just allows ridiculously high LTVs. There's no other way to put it. To start, I think we're going to have about 40 vaults, if I'm not mistaken, which would be kind of pairs of you deposit something, you can borrow against it. All major stables, a few flavors of Bitcoin, a few flavors of Solana as well. And then progressively, we'll continue to add more and more kind of altcoins, further out assets, you know, tokenized stocks, RWAs, and so on like that will come with due time.
Absolutely. Samyak, before I get to you and bring you in on this partnership here, Kash, can you give me a very quick timeline of the events here? Because things are developing so quickly. So when did the idea for Jup Lend come about? When did you guys decide to start working on it? I know it was in private beta. We're at a private beta now. So give me that sort of high-level timeline. How fast are things developing?
Very fast, in classic kind of Jupiter style. So I think the idea was maybe broached 6 months ago. So Meow and Samyak have a long history together, as I'm sure we'll talk about. But maybe about 6 months ago, we kind of had the idea to start moving. It was maybe 3 months ago that we kind of announced it. We had enough comfort that we knew we wanted to move forward with it. Spent the next few months building. We've been in private beta for the past 2 weeks. And then by the time the viewers see this, we'll be live in public launch. Obviously, you know, like anything else that Jupiter does, it's going to continuously get better based on user feedback. So it's far from a perfect product, but it's a product that we know can drive a lot of value for users and that we're really excited about with some bells and features that we'll talk about, I'm sure. So it'll launch in public now, and then it'll just keep getting better and better over time.
Exciting. Samyak, I want to bring you in on this. You're a Jup Lend partner now. So in practice, can you explain to me how Fluid's infrastructure makes this borrowing and lending safer for people in the Solana ecosystem, how it makes it more efficient compared to other protocols? What's happening behind the scenes that you can take some credit for?
So Fluid is, I consider it to be the most advanced DeFi protocol, even on the EVM side, because of the architecture, how we developed. Our vision to make the Fluid is like, how can we make an ever evolving DeFi protocol? Because, whatever you build now, it might go obsolete in next 2 to 3 years when the new innovation happens. For example, just to put it into numbers, money market makes DEX 10x better, and DEX makes money market like 2x better, and something like that. They just work together, helping each other. So it's the infra where you can build infinite protocol, but the main thing is it's the biggest part of that is it's a money market. And that's what we are launching on with the Jupiter Land on Solana. It will be, you can earn yields. It's the simplest way to earn any yield. You just deposit and you get the tokenized form of the deposit, and then you can move the tokens around. You can do whatever it is. And that, and then there is the borrowing side where your positions are an NFT. So you borrow and lending, you deposit collateral and you borrow, you deposit SOL, you borrow USDC, you'll mint an NFT. So you can move your position anytime. The simplification of this is like, if you want to switch wallets or whatever, you can just move all your JL tokens, all your NFTs and so on, and you're all set with the new wallet. You don't have to, worry about how will I migrate my position or that. So it allows you to shift your wallet very simply. That's like a upper level feature for the user, but internally we've done a lot of mathematical advancement into different things. First of all, there is the architectural advancement, which is like liquidity layer, and on top of it, infinite protocols. Initially, we will have 2 or 3 protocols, and the other advancement is the advancement on the liquidation side. Liquidation ensures that protocol won't have any bad debt. Like if the liquidation triggers on time when the asset price goes down, it will ensure that protocol won't have any bad debts. So liquidation is a very critical part of borrow lending, which users don't see. But the benefit of liquidation is if liquidation can happen on time in the most efficient way, then you can allow users to borrow more, provide them a higher LTV. So we've done the massive innovation on the liquidation side. I can give some points on that if you want, but from my perspective, it's like 100x better than any other liquidation engine out there. And then because of such an advancement into the liquidation system, it allows us to provide the highest LTV in the market.
So I want to dig a little bit deeper into this liquidity layer and the liquidation engines that you mentioned. But Kash, very quickly, could you break down for me why this is new and exciting and why it's an important development for actually anyone using DeFi on Solana?
Absolutely. So when you think about trading, you're like, okay, what really matters for trading protocols, right? Well, okay, it's speed and it's execution price, basically, right? Can you get the best price? And that's what Jupiter's been able to deliver for quite some time. When you think about borrow lend, really what matters is risk. That's the primary thing that you need to optimize for. Risk and then capital efficiency is a second thing that comes along. And so when you have this liquidation engine that is so much more powerful, and by the way, this is not marketing speak of like, oh, this is 100x better or something. So it is like literally mathematically better in the sense that the liquidation penalties that you pay can be up to 100x lower than what you're going to pay elsewhere, right? So it is a meaningful financial difference for users. And I think what this ends up enabling is a more streamlined, more optimized borrow lend system. One of the downsides of DeFi has always been, relative to TradFi, has always been, in TradFi, you can do under-collateralized borrowing, right? I can put up less collateral and I can borrow more because you have my credit score and so on. And DeFi has always had this fundamental issue of, okay, you always need over-collateralized lending, right? In order to borrow $100, you got to give me $110 or $120 or whatever else it might be. And so what we're trying to do is get as close to par as possible with traditional systems without the credit score and the centralization that is typically accompanies those systems, right? And so that's really what we're trying to do, is kind of push the envelope on what DeFi is even capable of achieving in order to make a better end product that ultimately is better for borrowers. That's the basic idea. If it's better for borrowers, if your capital goes further, if it's more capital efficient, with less risk, you're going to be getting more value out of the protocol. Lenders are going to come and get better rates because there's more borrowers coming out of it. And so it's more yield for lenders and it's safer borrowing for borrowers. That's really what we're trying to drive here.
Super, super exciting. Just very quickly to get back to this liquidation engine topic here. I got liquidated not too long ago and I noticed that there was a fee. I know. It was. I shouldn't have done it. I went to bed with a very high leverage long position. And the market went against me. So I got liquidated. And I noticed that the liquidation fee was higher than I expected. Now, I assume there's a lot of mechanics that go into calculating that fee. But you mentioned that there's a better liquidation engine. Essentially, it's 100 times better. So in layman's terms, what are the mechanics that allow that liquidation to be so much better for both the user and the platform?
So let me dive into what it enables. First of all, our liquidation is more like trading on DEX. So for example, if you do a trade on Jupiter aggregator, it routes from the best DEX aggregator, the best DEXs out there. So our liquidation engine's integration is similar to an AMM, like a Jupiter aggregator can integrate it and route trades through it. While it's not possible in other protocol because you have to keep the tracking of each position separately. In the Jupiter land, all the positions are structured in such a way from highest risk to lowest risk that you don't really have to fetch each user's position. You're liquidating the all the positions above liquidation threshold. Now you don't know which users you are liquidating. You don't know what all the users exist. You're just liquidating this bad debt, which is aggregated of all the users above that position.
Just to kind of put this even more in layman's terms, like the analogy that I would use here is like, imagine you're like picking strawberries, right? Like one way to do it is you have to go and pick each individual strawberry. That's a liquidation, right? The much better way is to have this like industrial machine that kind of just churns and picks everything all at once, kind of indiscriminately of which plant it's coming from. Fluid and Jupiter Lend, they're doing the second, right? Other people are kind of oftentimes doing the first. Is that right, Samyak? You can actually fact check me in real time if that's the right way to think about it.
Yeah. You can say in that way. Just the only thing that I'll mention there is like machine might be very energy consuming, but the liquidation algorithm is not. So you liquidate each position. So even if you liquidate a single position, the amount of compute that will take will be more or less same as liquidating these 1,000 positions here with that liquidation algorithm, because you're liquidating a bad debt which is aggregated of all the users. So you're not liquidating each users, but all the users who exist in this range. You're liquidating all of them together. And you can liquidate any amount. You can liquidate like $100. You can liquidate $1,000. You can whatever the user is doing the swap, the user can liquidate that. User doesn't have to liquidate a massive, like if there is a 500,000 of liquidation, user doesn't have to liquidate the whole 500,000. User can also liquidate a very small part of it. So yeah, that's one part of it, which makes it very efficient.
So hopefully nobody listening to this gets liquidated anytime soon. It's a horrible feeling waking up to being liquidated. Not to impress anyone who has been liquidated recently. I'm with you. We're on the same boat. But I want to talk about liquidity. It is also a hot topic. If you're talking about a healthy money market, you need liquidity. And I saw that one of the updates, correct me if I'm wrong here, Kash, was that a stablecoin bootstrap fund with Coinbase was announced. Is that accurate? How does this tie into bridging funds? How does this tie into better liquidity, healthier money markets? And do I have to leave Jupiter to access that liquidity, or how does it work?
The good news is, no, you don't. So this is really kind of fundamental to the DeFi SuperApp vision of like what people want is convenience and trust in a single brand, in a single kind of unified experience. So right next to the trading options or the perps option, you have Lend right there in the menu bar, and you can get right to it. The liquidity itself is actually super interesting. So indeed, we are really thrilled to partner with Coinbase on it. Shout out to my guy, Ben Liu, who kind of set all that up. They'll be depositing funds across the kind of ecosystem in terms of protocols that they believe are highly credible, trustworthy, kind of facilitate liquidity for their own tokens, obviously, to start right now. But really, I think what Jupiter Lend is going to be able to do is create this unified liquidity layer, right? When you look at other DeFi protocols, what they do is they kind of have segregated liquidity, right? As simple as, hey, in V1, we have a set of contracts. If we go to V2, now we have to migrate all the liquidity over to V2, which is kind of lossy, difficult, and whatever else. With Jupiter Lend, it's all in a single liquidity layer. And then you can use that liquidity for anything, right? So yes, the borrow lend vaults, but also multiply without having to go and deposit somewhere else. And then I won't give too much off on this call, but there's other things that you can do with that liquidity. And really, in theory, anything that you can do with a giant pile of liquidity, any DeFi application that's kind of powered by liquidity, you could build right on top of Jupiter Lend due to the architecture that it has. And just like the simplest base point here, because of the way this architecture is set up, users of Jupiter on the swap or on the spot side will actually be able to liquidate users on the Lend side. Hopefully that doesn't happen very often, but it leads to better prices for users on the trading experience, right? Because the bad debt has a small penalty that the traders can then benefit from. And there's a bunch of other kind of integrations that we're expecting to take place across the entire product suite here.
Super exciting. You mentioned DeFi SuperApp thesis there. I did want to ask about that, but you explained that quite eloquently. So I'm going to dive straight into the next question. Unify. At Crossroads in Istanbul, you shared this idea that one day, hopefully in the not so distant future, TradFi and DeFi are going to sort of come together and be unified rather than remaining as two entirely separate siloed systems. Curious how Jup Lend moves Jupiter and the entire Solana ecosystem closer to that unified vision.
I think that it inevitably is going to draw more capital on-chain, is the basic idea, right? Is that if we're able to provide a safer experience with better rates that is ultimately better for borrowers as well as asset issuers, we make it easier for people to kind of bootstrap. Stablecoins are a great example, right? Most stablecoins have to kind of be born with most stablecoins, when they're born, are kind of they need borrow lend markets to kind of help bootstrap that kind of liquidity. And this gives us another offering at Jupiter to help kind of bring those partners on chain. Again, I can't get too specific, but we're already having a bunch of conversations with folks who are like, hey, we're tokenizing real world assets. And yes, we want people to be able to trade them. But how do we kind of differentiate and show that being on-chain is actually even more valuable than having those assets off-chain? Let's use tokenized stocks as a simple example. If you or I buy Tesla, unless you have a multi-million-dollar net worth, maybe Jack, you have a private banker that enables this, but for a humble boy like myself, I can't actually borrow against the Tesla that I own, right? It's just like I own it and then it just sits there and then I kind of have to hope that it goes up. But what the ultra wealthy have is the ability to use that as collateral to then take out a loan, buy a house, do whatever else. Well, with DeFi, if we can take these tokenized stocks, put them into Jupiter Lend, now you can actually earn yield against those assets. And now all of a sudden, you're giving the same experience to any retail user around the world that only the ultra high net worth have in America or in certain really sophisticated markets. And so I think that kind of value proposition is really exciting to a lot of asset issuers who want to find ways to reach broader audiences all around the world and give them value that they cannot give in traditional systems. And so I think that Jupiter Lend is an important piece of that equation. Obviously, it's not the whole picture. You need a really high caliber network like Solana. You need to have a lot of usage across the world. You need to have really good go-to-market, strong community, et cetera. But Lend, I think, can play a substantial piece in that of creating more value for people as they come on chain.
Makes absolute sense. Samyak, I want to bring you in on this. Obviously, DeFi and democratizing access to finance is something you've been thinking long and hard about for years and years now. So where does this development in the Solana ecosystem fit into your vision of where DeFi should be, where democratizing access to finance should be? Are we moving in the right direction? Is this just one of many partnerships that you're looking to sort of cement and talk about in the next few months? How does this fit into your roadmap of DeFi and the original ethos of DeFi as well?
The way I look at DeFi is going to be trillions of dollars of industry, and it will exist in the whole ecosystem in multiple chains. Right now, for example, Solana probably has the most amount of retail users, while Ethereum has, a huge amount of whales, I think. And, it's like both ecosystem is somewhat different. Like, Ethereum, for example, Aave is like $70 billion protocol or something. It's like massive capital there. But here on the Solana side, the stocks are already here on Solana, which it's not there on the EVM side. It's like there will be many different kinds of markets in all the different places, and the base thing for that is like they will need borrow and lending services, they will need the DEX, and they will need all the basic services. And for example, stocks is something we probably will soon go live on the Jupiter Lend, so you'll be able to borrow against it, which is something that I have been very bullish on because of how inefficient the TradFi systems are, which Kash already mentioned. We already have gold on the Ethereum side. We will have another RWA asset on the Arbitrum side, which is like USD AI, which is also RWA, but it's renting GPUs and so on. So like there will be so many different kinds of assets. There will be so many different, like even the credit off chain can be made tokenized on chain, and you can use that as collateral or earn yield on that. And there will be a lot of instruments in the world, and it will be just distributed all over the place. And from that perspective, I just think like we don't know where things are going, but we know one thing for sure, that it's going to be trillions of dollars of industry. So, we just have all the toolings ready for that. Whenever, something comes along, we should be ready for it.
Absolutely. Kash, when we talk about, trillions of dollars of market size, when we talk about DeFi and TradFi unifying, to crypto natives and degens like myself, it gives us this sense that, DeFi is growing so fast, Solana is growing so fast that we're sort of going to eat the world at some point, right? And one of the criticisms that unfortunately comes with this is this idea that Jupiter's sort of moving towards becoming a bit of a monopoly, because every other week you guys are releasing something. It's great, it's innovative, it's fast, move fast and break things. We are accelerating, but there is this slight sort of question mark in people's minds of, are we moving towards a monopoly? And does that come at the cost of free market economics? So I just want to ask you on that. Is this something that people have brought up with you recently, or how do you think about this idea of Jupiter becoming a monopoly?
It has come up. Let me assure you, when I look at the competition, I see very fierce, talented people that are very keen to put that myth to bed themselves. So shout out to the other teams on Solana who are doing some really great work there. Listen, I think monopolies are problematic when they are enshrined in some way, right? When they cannot be taken away because of regulatory moats or some kind of, other very high switching costs that might exist. The truth is, Jupiter exists at the application layer, right? If you want to use a different swap protocol, all you got to do is just go to a different URL, right? We're not holding anyone hostage on what they want to do. Same goes with the borrow lend, right? Removing liquidity is only kind of seconds away. So it's very hard for me to see a world in which Jupiter becomes like an enshrined monopoly of the sort that is really problematic. But I think of a company like Apple, right? They have dominant market share, not because they have done anything kind of shady or kind of cornered the market of some scarce resource that no one else has access to, but because they build the best products and people want to use those products. And that's really where I see Jupiter as well. We spend a lot of time being very intentional about building the single best products. We, more importantly, iterate really quickly based on user feedback. And to the degree that we have kind of an outsized market presence, I think that's really all it comes down to. I don't really see any way in which it can be dangerous, because the second that somebody builds a better product or a better community or has a better story to tell, you'll see users start to go over there. And let me assure you that we are eager to kind of get as many users as we can, to get as much volume as we can, to get as much revenue and as much kind of change impact in the world as possible. And so we're not going to slow down on building awesome products. And hopefully that kind of leads to this steel sharpening steel environment on Solana, where you know that, hey, Jupiter is there. We have some great product experience. We have great partners like Fluid. And so we're going to come at it full force. And hopefully that makes everyone else level up their game. And by the way, we're already seeing that. I won't name some of the competitors by name, but there's a lot of great ones who keep us up at night, every night, as we're trying to figure out, okay, how do we kind of make sure that we can still deliver more value to users than anyone else?
Absolutely. You mentioned partnerships there. You mentioned innovation, iterations, and feedback, most importantly. So quick question for both of you here is, what has the feedback been? Has anything stood out to either of you, either on the infrastructure side, when it comes to pooling liquidity, avoiding fragmentation, or maybe on the user experience side for you, Kash? Anything stand out to either of you as critical feedback from the community so far?
Yeah, this is the other nice thing about our community, and that's a big part of, I think, our relative success, is that our community has no fears in telling us where we've up. Sorry, I don't know if I could swear or not, but
of course you can. It's fine. It's anything.
Okay, good. Yeah, they tell us we up all the time, and they are correct. So we have this website, feedback.jup.ag. I think in the first 5 days, there was 50 to 100 pieces of feedback on there. If you're like, hey, this box doesn't make sense, or, my position is hard to understand how this actually works, or why do I have multiple vaults, and so on. And so, yeah, there's been tons of ways in which, the product was maybe more complicated than we expected. We weren't able to communicate it really effectively on how it kind of worked under the hood. There was certainly a giant demand for new assets and new functionality that we just don't have yet. And then there's simple things that we're working really hard to figure out. For example, Jupiter Lend at the public launch, you'll not be able to borrow against your stake Jup. We want to get there, because that is something that has been yelled at me constantly by the, whatever it is, 400,000 wallets that stake with Jupiter, right? And so there's definitely a lot of room for improvement. That's mostly where we're seeing it right now. Is hey, can you work faster to get more assets that kind of unlock more value for us?
Exciting. What about you, Samyak? Have you come across anything, any friction points maybe that people want to have resolved, or maybe your phone's ringing with new partnership opportunities? What's been happening since Jupiter Lend really took off?
I mean, on the feedback side, the Jupiter community, they've just let us know a lot of changes on the UI and different things. Yeah, many things we thought was obvious, but was not obvious to some of the audience. So yeah, we did some updates on those ends on the feedback side. Yeah, aside from that, there are different partnerships and different things we keep on exploring on the other side. But yeah, right now I think our biggest focus right now is the Jupiter Lend and then the Text V2 that we're going to launch on the EVM side. So yeah, that's the biggest focus, and then we'll shortly be deploying Fluid at multiple different EVM chains that are coming. So yeah.
Exciting. A lot to look forward to. And you mentioned the Jup community there, Kash. A very vocal bunch of cats, definitely, but also becoming accustomed to, I think, updates as well, constantly cooking something new in Jupiter. So what's next? Is it going to be a new feature? Are you continuing this aggressive expansion with another airdrop? Is it going to be a new product? Is it going to be an acquisition? What can we look forward to? What's next?
I mean, is it too cheeky to say all of the above? Yeah, so we have plenty of new features coming. We have definitely ideas on incentives. We still, loyal followers of the Jupiter DAO will know that we have a large pile of what we call carrots, 200 million Jup that was set aside by the community and through a DAO vote for growth of the community and the product. So you can expect to see more there. We have Jupiverse coming up next January. And yeah, we have new products as well. I think really there's 3 areas for Jupiter as a whole that we're really pushing hard on. So the first one is exploring how we can build token creation metas, right? How do you create tools such that more organic communities can actually form around these things that we call tokens on chain? Studio is our first step there. To drop some alpha, there's going to be some other products that are released in that same dimension. We're not interested in playing, the pump or the bonk games. All due respect to those guys, incredible teams and whatever else, but we're trying to take a little bit of a different path and see what's possible there. Creation is a big focus for us. Second big focus for us is on mobile. We want to do a lot more to meet users where they are, right? At the end of the day, crypto is not going to scale to trillions of dollars through browser extensions. It's just not, right? You need to have mobile, and we want to really focus on how do you make your crypto usable in the real world? How do you make it easier to onboard people via features like Jupiter Send, but also how do you make it easier to actually use that crypto? And that's all I can really say on that side, but people's imaginations can kind of take off from there. And then of course the third one is Jup Lend, right? Trying to solve what we think is like the hardest single problem in all of crypto, which is fragmentation between chains that keeps users, assets, and liquidity apart. And if we're serious about building this kind of universal exchange, it's really important to solve that problem. And so putting in a lot of time on that, or a portion of the team is putting a lot of time on that, and people should expect some updates in the coming weeks and months.
Exciting. So am I correct in saying to everyone listening to this that right now they can go to jup.ag/lend to check out some of the lend and borrow features there and explore the platform, see what kind of APY they can get by using their crypto as collateral? Is that URL correct? jup.ag/lend?
That is correct. And I will say if they go, they are likely going to see something that puts a smile on their face. We're working with more than a dozen partners on incentives as well. So in addition to the natural kind of rates that I think will be quite good due to the underlying tech, the first few months we're going very hard to ensure that our APYs are really best in class. So if folks are interested in getting the best yields and the best borrow rates possible, that's what they're going to find.
Exciting. I want to thank both of you, Kash, Samyak. Thank you so much for coming on to share your thoughts, and hopefully catch up very, very soon with both of you.
Yeah, likewise.
Jack, you're the best, man. Thanks for having us, brother.